This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management is pleased to be one of the founding members of the Trade Finance Working Group launched on the 27th of January 2023. Created under the auspices of the Alternative Credit Council and AIMA, the Alternative Investment Management Association, the working group brings together alternative lenders in the trade finance sector to support the development of trade finance as an asset class, with the remit to raise awareness of trade finance amongst investors and address challenges to greater participation by alternative lenders in the sector. Joining this group aligns perfectly with TradeFlow's experience in this asset class and its mission to help reduce the growing trade finance gap faced by SMEs.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil may resume its rally in 2023 as Chinese demand recovers after COVID curbs were scrapped and lack of investment limits growth in supply, OPEC country officials told Reuters, with a growing number seeing a possible return to $100 a barrel. In 2022, oil soared above $100 for the first time since 2014 as demand recovered from COVID-19 lockdowns in much of the world and Russia's invasion of Ukraine added to supply concerns. But Brent crude ended the year close to $86 on fears of global recession. A move back above $100 for a prolonged period would earn more revenue for OPEC members, whose economies mostly depend on oil income, and be a setback for industrialized economies trying to control inflation and interest rates.
Russia will cut oil production by 500,000 barrels per day, or around 5% of output, in March, Deputy Prime Minister Alexander Novak said on Friday, after the West imposed price caps on Russian oil and oil products. The price of Brent crude rose on the news of the output cut from Russia, the world's second-largest oil exporter after Saudi Arabia, increasing by more than 2.5% on the day to $86.60 per barrel. As of today, we are fully selling the entire volume of oil produced. However, as stated earlier, we will not sell oil to those who directly or indirectly adhere to the principles of the price cap, Novak said in a statement.
Moving on to the top news in the energy sector.
China's February gasoline exports may fall a second straight month to hit their lowest in 8 years as domestic consumption rebounds after the nation emerged from COVID lockdowns, industry and market sources said, likely buoying Asian refining margins. Refiners in the world's number 2 oil consumer began scaling back refined fuel exports in January as local demand rebounded, reversing a surge in exports in the fourth quarter of 2022. Lower gasoline exports from China will likely tighten regional supplies ahead of the peak summer driving season in Northern Hemisphere countries, driving refining margins in Asia upwards as buyers pay higher prices to secure cargoes.
Russian missiles hit power facilities on Friday across Ukraine, where President Volodymyr Zelensky returned from a tour of Western capitals and Ukrainian officials said a long-awaited Russian offensive was underway in the east. Ukraine's armed forces said in an evening update that Russian forces fired more than 100 missiles throughout the country and staged 12 air and 20 shelling attacks. The Facebook post said 61 cruise missiles were destroyed. Energy Minister German Galashenko said Russia had hit power facilities in 6 regions with missiles and drones, causing blackouts across most of Ukraine. Next, we have the top news in metal markets. Gold inched higher on Friday while markets awaited next week's U.S. inflation data that could influence the Federal Reserve's monetary policy trajectory. Spot gold was up 0.2% to $1,864.10 per ounce by 2:34 p.m. Eastern Standard Time, 1934 GMT. U.S. gold futures for February delivery settled 0.2% lower at $1,874.50 per ounce. Investors await U.S. consumer price data due on February 14. While concerns abound of a global recession, a strong rally in world markets suggests optimism is returning, which could ease the Fed's rate hike cycle.
Dalian iron ore futures edged higher in choppy trade on Friday, while the Singapore benchmark slipped, as traders curbed their optimism about demand prospects taking into account the global economic outlook. The most traded May iron ore on China's Dalian Commodity Exchange ended daytime trade 0.8 higher at 863 yuan and 50 fen, $126.98 a ton, reversing early losses. It was up 1.7% for the week so far. On the Singapore Exchange, the steelmaking ingredients most active March contract was down 0.1% at $123.90 a ton, as of 0710 GMT, and on track for a second straight weekly fall.
We will now look at the top news in the agricultural.
U.S. Chief Agricultural Trade Negotiator Doug McCallop wants China to keep striving to meet U.S. farm goods purchase commitments under the 2020 Phase 1 trade deal, but told Reuters that he also is pushing to diversify exports beyond the biggest U.S. grain customer. In his first media interview on Thursday since his December 23 Senate confirmation of his U.S. Trade Representative office post, McCallop said that his top priority was opening new markets for U.S. agricultural products. "I think for the American farmer, it's important to have a diverse set of buyers out there," he said. "We need to develop additional markets." That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.